I think the market's down because there seems to be a renewed outbreak in some of the states, some of the southern US states, and the market's getting a bit worried about that. And at the same time, clearly, we've had the most extraordinary recovery in markets since March the 23rd, and any hint, as there was in Powell's statement, that economic recovery isn't going to be quite as quick as some people had expected, is going to cause the markets to certainly pause for breath at this time.
And on that note, around the uptick in cases we're seeing in a few states in the U.S., in particular Texas, which has seen an uptick in the last day or so in terms of their coronavirus cases, what's actually priced in terms of the market in the U.S. with regards to a second wave?
I don't think that's priced in at all. I think the market could react quite negatively if this rate of new infections climbs from here. I think the market has been pricing in only a single rate of infections from COVID-19, and any substantial escalation of second infection, therefore a necessity to shut down economies again, would provide a real problem. The key to me is whether hospitalizations increase. And I read this morning that hospitalization cases in Texas and in California have reached highs, the highest period since the middle of May. So that's definitely worrying.
Chris, I just wanted to jump in and ask you about yield curve control, because the market was anticipating they might get some direction on that from the Fed. It felt as though the Fed wanted to provide a little bit of guidance for the long term, but not too much, because perhaps it could set another spike amongst some stocks where you've seen a lot of speculation take place. What do you make of that, the Fed mindful about the escalation of those asset bubbles?
Yeah, I think it's a really tricky one, and we've seen yields come back a bit from their recent highs. I think the Fed is trying, as ever, to play a balancing game here. It doesn't want the market to get carried away with it. But obviously, with yields tending towards zero, that's just going to further inflate asset bubbles in equities over a short period of time. So, as ever, Chair Jerome Powell is trying to get this balancing act right.